Okay, welcome to Swing Trading with Cycles channel. This is where we time the markets without predicting the markets, because predicting the markets is unreliable. But if you follow the trend, you can get in early in the trend and kind of ride it to wherever it's going to go, spot the reversal, and get out relatively undamaged, right? So we're going to do the S&P 500. We'll look at QQQ and IWM as well. And this is October 15th. So we had the big CPI print on Thursday. Huge green day. This is your daily chart for SPX we'll start with here. So this was Thursday, this huge green candle here. So we dipped way below the low of the previous days, swept all these lows, completely gone, but then rallied back, big green candle. But then we came back on Friday, had a pretty big red candle. But notice, like if you're looking at this, and if you found this channel, hopefully you're starting to understand this. This is educational as the point. We did not make a new low, right? Like we came like a little bit more than halfway through the candle. Now, so we're gonna watch below the low of this candle here, which is 35.79, call it 35.80, right? Ish. That's where real selling can happen, right? Like below this low, that makes this candle a swing high, right? That's important, and we'll look at that on the daily level as well. But this is on the weekly level. But this is your daily level, and so that makes Friday day 27. So possibly a daily cycle low. We talked about that, right? Thursday being day 27, Friday was day 28 potentially, unless Thursday was your daily cycle low. We talked about the idea that you would get some kind of, a big move on the Friday jobs report, which we did, right? Friday, we got a big rally up. Then we came down. The CPI print, that's going to be important. Then we got a big rally. But then we got something, again, that looked like a reversal, but didn't quite get there. And so if we think about the weekly candle, how did that turn out, right? So we basically ended up with a doji looking thing that is still red. So it opened here, right? If you can, I'm going to zoom really close in. It opened right here and then closed right here. But in the process, it went all the way up here and then went all the way down here. So we know we're talking about a range from a low of 34.91 to a high of 37.16. So more than 200 points. Huge range. But we know we closed here, so more likely that we are going to open, below or right around the closing price, which was 35.83. So if you imagine that happens, you can see this little rectangle I just drew here. Imagine a candle like that. That's how it's probably going to open, right? The weekly candle. Now, what happens from there is what we are going to be watching for. Does it break down below this low, or does it keep moving higher and make a higher high on the weekly and set this as a swing low? That's what we're going to be watching for. And that's the way you want to think about it, right? Like that's important to understand. Because we made this lower wick, that created the situation where this is going to most likely open as an inside candle. Now, if this was a green candle, then this would open up here, right? This would look like this, but it's red, right? Like if this was green, it means that this would close here, and so this would open here, but it's red. And so what we're actually going to see is more likely that this is going to open lower end of the range. I'm just moving this down here. There we go. And we see what the levels are again. Call it 3,700 to 3,500. Like, really, really, really loose ballpark, 200 point range. That's your weekly chart. And on the monthly, you also have this doji looking thing, right? Right. We had this little rally that completely petered out. And we're now at halfway through the month. So we're now getting a real shape of what is October going to start to look like. And this is not good so far, right? This teal looking line here is the 50 period moving average. And because this is a monthly chart, this is your 50-month moving average, right? 50 months is about 4 years, right? Wait, is that right? Yeah, exactly. Because 4 years is 48 months, right? And so 50 months is just a little over 4 years. And so we're right now knocking on the doorstep of going below the 4 year moving average for all intents and purposes and measured on a monthly level, which will give you slightly different results. But the point is, we're in a very deep downtrend, and that makes sense. We know that because we topped out in January, you know, January 2020, literally the beginning of this year. And if we go back to that, we think about this. Let's think about this as your like Q4 kind of sort of think about it. We can think about this as your sort of Q4 outlook. Think about the fact that this is where it topped out Tuesday, January 4th. I'll zoom in, and you can go back, take a look at as always, links in the description. Go back and take a look at the channel. I started posting around mid to late July, right when this swing low started, or excuse me, right when this swing high formed, this bearish swing high that started this downtrend, right? And so that's it. Tuesday, January 4th. Just to be super, super clear, right? This started a downtrend. We made a lower low, and then what did we do? We made a lower high. And then we made a lower low, and then we made a lower high, right? I will zoom out. You notice that we came down, and at one point we made a higher high above that, but then what happened? We just completely collapsed, right? And then we kept going, and now, so it all started there. And I keep saying, if you can spot the way a downtrend forms, that means you can potentially get out of the way. It's the whole point of understanding price action. It's not about predicting what's going to happen. It's about understanding what's happening now and making a decision about how you want to control risk. So this is definitely ominous, and but at the same time, this is where the rubber hits the road. Are we going to get a little bit more of a push? And the next level that we need to get above is like this area right here, like 38.20, call it, right? Because we could still continue to rally, and it would still be a lower high if we don't get above there. And even if we get above there, we still need to get above here. Our high was on day 4 of this daily cycle. And, even if we're getting a daily cycle low here, we could get another left translated daily cycle easily. So that's SPX. Let's look at the other indices to just get a sense of what the levels are, because it's the same pattern, right? Same idea. Day 27, big reversal on the CPI print. Then you get a big red candle. Doesn't quite make a lower low. In this case, we definitely went through more than halfway through the range. So this is leaning bearish. And what does the weekly look like? Ooh, this weekly looks much worse. Again, most importantly, made a new lower low. And this yellow line here is actually your 200-week moving average. And notice, this is the third week that the Qs has closed below the 200-week moving average. I'll say that again. This is the third week that the QQQ ETF for the NASDAQ 100, it's the third week in a row that is closed below the 200-week moving average. And you can say this week here, the week of September 19th, it's like, oh wow, it bounced off of it. It's going to be okay. And then this week actually opened green. You know that because of this upper wick. Because we know it opened here and it closed here, which means if it opened here and we have an upper wick here, it means it was green at one point. It looked bullish. Like, oh God, we're going to go and make a new high. We did not, though. This candle, similar thing. I mean, look at how ugly this is. My God. So this is bad news bears. And what we're going to see very soon is this cross. Because this thing here, is this your 10-period moving average? Yeah. So that's your 10-week moving average, clearly moving lower. And at some point, it's going to cross below the 200-week moving average, which is going to tell you we're in a really protracted downtrend. Doesn't mean that's an indication that it's definitely going to last much longer, but it's just not a good look. And if we look at the monthly, again, still looking more bearish than the SPX, because in this case, we're actually currently like in new low territory, which is to say we're right now below the lows of all the previous months, right? Like We're below this month's low and all these months' lows, like right now. Whereas, again, if I flash back to SPX, we had moved right at that low, right? So that tells you something about like the buying pressure that's in SPX versus, let's say, IWM, or excuse me, QQQ. So this is IWM to close it out. Again, same idea, not to belabor the point. Day 27, CPI print, big bullish candle. Now we're getting a reversal. We're gonna have to see if there's follow through there. The low on Friday was 166.71. So that's the level you're gonna really want to watch. And if we look at the weekly, my God, it's just, I mean, this is like a textbook bear flag, right? You can say, oh, wait, this is a what do you call that? A double bottom, right? I mean, we'll see. It could be. It certainly could turn out that way. You have this upper wick here, which, again, same kind of idea. I'll just kind of draw it here, not to belabor the point, but like we'll expect to get some kind of like opening candle around there, right? Like it's going to be in this vicinity because this is where we closed. Usually the open is very close to where the close was for the previous week. And so we get some kind of inside week, and we're going to want to see which side of the range we break. That's what it's all about. So that's a move on the broader markets. It's bearish. I'll just say we started this decline in the first quarter of the year, and we're now in the last quarter of the year, and we're still moving lower. Think about the highest time frames. I'll go back to the SPX chart. We'll look at the yearly chart just to kind of get a quick gauge. We'll take off all of the drawings, right? We'll hide all of them. And you can see we're now back below the low from the previous year. And notice, this has just been a pretty steady uptrend. Obviously, you had this year, 2018, 2015, 2011, which were just ugly years. This is obviously going to end up being a red year, right? Where like it's incredibly unlikely, in the next 2.5 months, this thing turns red, or excuse me, green. But then you have to think about what is this setting up for the next year, right? Are we talking about something like this where we had 3 years of red, or something like this where it's just 1 year of red and then a move higher? Like even this was your global financial crisis, and it was just really 1 year of red. And obviously we traded lower. This was very red at one point, but we rebounded. So you've got to think about the bigger picture as always. And as you're thinking about that, really try to understand what are the sectors that are going to move the most, and what are the ones that are going to be like the harbinger, the one that's going to tell you things are going much lower or that things are rebounding. So definitely take a look at the semiconductor update. We'll add a link to that very easily. That'll give you a really good look at the sector that's probably going to lead both on the downside and really the reversal once we're ready to come out of this doldrums.